day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 16th of October, 2019, getting on to 4:20 p.m. Central Daylight Time. So a down day in the stock market after hearing the debates yesterday. I think the biggest news of the day in the financial markets was seeing the consumer spending numbers slip. Remember, our economy's 2/3 consumer spending. We have more reports coming out. They're already coming out with GDP estimates and so on. If you get my research, I covered all that tonight for you. But that's what I think caused the market to start questioning what's going on. It may also decide to push the Fed to the point where it says, you know, maybe we need that other cut. We've got to keep the consumer strong. I don't know. In the British pound, one of the pieces of news is they're getting closer, supposedly, to acceptance of a Brexit deal between the EU. The word is closer. There is no deal yet. We'll see what goes on. You know that they're voting tonight on the GM UAW strike. It appears that that's settled. The market didn't care about it that much. We also saw the beige book numbers this afternoon, and the Fed sees the moderation in industry. There's no question. It still sees strong jobs, but it's got concern about world trade. Weekly area chart of closes. The bias is up on the weekly chart, and these are closes only on this because the market has stayed over that 18-week moving average of closes. It also has a pattern that's been bothersome, and I'm not the only one that's noticed this. I'm reading about it, of lower highs, lower lows. You haven't been able to get through previous highs. We thought that maybe when we heard progress on U.S.-Chinese trade, it would pick up, and it has. Let's not lose sight. This market has rallied up. The problem is it's into this whole field of resistance, and bull markets always need more information to keep getting more bullish. So, if you will, the bull needs to be fed. The pattern on the market has been higher lows as measured by the swing line, higher highs. That's bullish. I filter that with key moving averages. I use the 18-day average, the 100, the 200. If you get my morning subscriber video, I have other averages I use, and you find how easy they are to work, and I review them each morning with you. Support, this whole layer right here, 29.54 down to 29.38. So since the market's over key moving averages, where might the resistance be? And one of the numbers is right here, the upper Bollinger Band. And the reason is a Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. If you go back and you look at your charts, you'll see that occurring visually. So that's the first challenge, be it to the upside or downside, is often an area where pros take some positions off. I'm not the only one watching these numbers, so we'll see what goes on. You are overbought. According to the slow stochastic, the bias is up, the trend is up, target 30.22. If you pull back, this is your support zone as I'm reading it. In the NASDAQ, you are into key resistance at the upper Bollinger Band. Overbought into this whole resistance area, still bullish. The market, like the S&P, higher lows, higher highs, but you've hit a target. You better get it some bullish news to keep it going. In the Dow, you have not, like the S&P, you haven't made it up to the Bollinger Band. You're overbought, in an uptrend, successful test back about a week ago of the 200-day average, support back here. But to get to these support levels in both the S&P and the Dow, you might lose your uptrend because you could take out a prior low. Then you'd have a higher high, and you'd have a lower and low pattern. In the Russell, I've been pointing out, I think since last week, that you've got these key moving averages, the 200-day, the 100, the 18. So as the market has rallied into them, I'm looking for resistance there. The market is not overbought. It takes a reading over 70 for me to declare it overbought. So you still have the uptrend. It's whittling away at the resistance. Support back at 1511. What you wouldn't want to see taken out is the 1500 level to break that pattern. In the VIX, I've been saying, and I'll continue to say it, if you hit this lower Bollinger Band, that is where I expect to see the pros step in and write puts. Each time they've gotten down, I wish I can take you further and further back here, I think they look then to come out at that key moving average. I realized the market had this run. I don't think the pros were playing for that. I think they were selling here, trying to come out there, and then the battleground became the 100-day average, and you exploded as the market got very nervous. Well, we've got a different environment right now where while the stock market's falling, you're not seeing it in the VIX yet. The VIX, as it falls, still says people aren't doing that insurance premium. In the bond market, we've been in a downtrend. In fact, we've been in a thrust to the downside that yesterday got really close to hitting the downside target of the Bollinger Band. You got to 159.23, 159.20 was that. Today you hit 59 and a quarter. That Bollinger Band is slipping ever so slightly. It might get closer to this 100-day average, but sooner rather than later, traders are going to take notice and say, how do they want to play the market for the end of the month in front of the FOMC decision? There's still a large bet that the Fed will cut rates again. I'm not saying they will or won't. I'm telling you where the bet is. And you go to the CME Fed Watch page.com. CME Fed Watch, I think it's .com. Go take a look at that. You can learn how to work with it. Lower highs, lower lows, still real good support as I see it, 129.10 to 08. Support is not a buy signal. Support is an area shorts might want to cover. Get back over 130.19 and you negate this downtrend. And in order to get to the 18-day average, what I term that line in the sand, you'd break that pattern. In TLT, you hit the number that I think pros were going to cover against today. You did it yesterday too, I believe. You hit 139.55. The number was 66, and you're drifting right on it, as you can see today. Take out 141.51. I say the downtrend ended. It is not the start of an uptrend because you have a lower and low and a higher high. Bears still controlling the market, but it's oversold. In the dollar index, this is the first challenge of the lower Bollinger Band. First challenges, my eyes go to them and I say, okay, if anyone was short this, that's where I think they're covering. If they're long, I think they're covering there. You can get beyond it, but I think parts of the shorts came out today. And I think in the euro, as you got up to the upper band, the longs were coming out today. You're overbought territory into that first challenge of an upper Bollinger Band. You haven't been there, my friend, since on this chart, and that goes back into the June time frame. So that's pretty interesting. The pound, obviously you're playing as the Brexit or not. Why even discuss it? You have no control over that. And by the way, people I was watching today, they're saying that if there is a Brexit deal, the pound is still undervalued. Not me, other people are saying that, and they can see another 5-6% gain in it right off the bat. That's what I saw. There was CNBC that I was watching it. In the yen, lower highs, lower lows, you're driving lower, and this is a sign that traders aren't feared or have no fear. They're not being scared off in the markets. That's important. You're oversold into a support zone, but that doesn't mean you can't keep falling. Oversold can convert to embedded, taking this market further. You don't want to be a hero. There's no trend in Bitcoin. You have a higher high, lower and low, resistance here, momentum still drifting down. In the crude, and what I think the spread is moving is, again, today the Iranians said that they have proof that the missiles were fired from a boat off the Saudi coast. I don't know what that means. Was it a Saudi ship or not? But the market looks at that as a positive because it keeps that tension, if you will, going between the Saudis and Iran. As you can see, crude rallied back to the 18-day average, and while the swing line is up, the bias has been down, and the market still has some upside momentum, but a lot of resistance between this 18-day average and the 100-day average. And again, the market's got diversion. There's something wrong here. You can't get over and stay over that 18-day average, so I don't think there's an uptrend at play just yet. Same thing in WTI. You can see the 18-day average of resistance. Momentum was pointing up. It's sort of drifting now. Resistance pretty clear to me between here and this number. Should you explode off some event, maybe you get back to that upper Bollinger Band. Gasoline still bullish, but overbought now. Will it have the power to get up to this Bollinger Band that is at first get back under this number? I think a lot of people are going to look at that last break low and get concerned. The overbought condition tells me not to look for a lot of support in that area if it starts down. In the nat gas, when you had lost this embedded reading, we were looking for a challenge, if you lose it, of the 18-day average of closes. The market got pretty darn close yesterday, missed it by, when I look at this, it hit it. No, it didn't. It missed it yesterday by 0.2. Today, good picking, hits it, drops right away. I think traders look at the things I'm telling you, but not everybody does, obviously. People have different ways of trading. One of the ways that I keep up, and I promise you, this is in my pocket just about all the time. Certainly when I'm out of the office, running around, I'm in the board of trade, down on the floor. Before I'm doing my TV interviews, I'm looking at this. And I want to see where the quotes are. I want to see news. I get streaming news through this. Alarms. You can set an alarm. Let's assume that I'm walking somewhere or talking to somebody. If a key number's hit that I want to see, it'll go off and it'll tell me how I can do anything in there. And what I love is this voice activation. Now, I've seen a lot of people with their different utilities. They don't have this voice activation. I want to see a weather map. Boom, show me the weather. It'll come right up. I want to see a chart on the S&P. Boom, it'll come right in there and show me what it is. I want to hear I set up my streaming quotes. I want to hear them play as I'm driving in my car. They'll play with it, and as the quotes come in, it's going to do the refresh. If you're in the grains, crush quotes. News. Look at all these news items. They'll all be in here, and special reports along with me. My videos will play in here, and you're going to get a push notification when they come out, not a text that other people charge. We have the traditional view. Look at how hard it is to read compared to what I had showed you right through here. So if you're looking for something a bit different, why not give it a try? It comes free with my research. It comes free if you're one of my accounts. You can try it free if you're neither. Just go to our website, sign up with our charting service. It's free. We will give this to you. You'll get a user ID and a password from us. Click here. It'll take you there as well. I'm Ira Epstein. You have a great day, and I'll see you tomorrow.